I thought he said, as a side, that we are watching out for things beyond inflation, such as financial fragility. So I think he did mention that the Fed was on the lookout for that. I do worry that in this period of accommodation, we've had an increase in leverage, not in the same places as before, in new places, of course, the emerging markets, but also the corporate sector in the United States. And leverage plus asset prices plus rising interest rates, that's not a great combination. You're sort of steering between two pitfalls. One is going too fast and tanking the economy, and the other is going too slow and raising questions about whether you were at the right pace, and then suddenly people think you're going to go faster, which is equally problematic. I think if it gets big, and I think he hinted at that, they may reconsider, but at this point, they're moving at this pace.
One of the fallouts from higher interest rates has been some disruption. Maybe that's too kind a term, but trouble in some emerging markets. Turkey is one particular example that's been out there. Is that a unique case, or is that the sign of things to come in some of these emerging market countries as a result of an appreciating dollar and a higher Fed funds rate?
Well, I don't think it's unique, but I do think it's an outlier. That Turkey has had some pretty significant buildup in corporate debt, especially foreign exchange denominated. And Turkey has also had some bad policies, including the idea that inflation is controlled by keeping interest rates low rather than raising them. And I think as a result, that has upset markets, and Turkey has suffered some of those consequences. Of course, Argentina was before Turkey. Argentina did many of the right things, but did them a little slowly, and the markets again lost patience. I think there are other countries which have problems of large current account deficits, large fiscal deficits, and possibly political change. And they will have to react when the time comes in a way to reassure markets. But in some sense, I think we hope that these two countries are outliers, not an
How about
indication.
India? Is India something that creates concern for you?
No, I
in this
think,
context?
I think broadly India has had reasonable macro policy over the last few years. I think there have been some aberrations like the demonetization, which slowed growth considerably. Growth is picking up right now. And, India has reserves, 400 billion plus. So it's in a much better position than it was in 2013.
It sounds to me, to borrow a bad local metaphor, that you see a lot of individual fires out there, but not one large conflagration. And really, it just takes the market to see them as a single. And there's every chance that could happen, but you think it's avoided.
It is possible. It is possible. And that's why I go back to my earlier point. There has been a lot of debt buildup in the emerging markets, but elsewhere also. So it is something we have to be concerned about, we have to watch out for, but I don't think we're there yet. And hopefully, if this process of normalization takes place in a reasonable way, but also global growth keeps up. And that's where I think the biggest risk is.